Welcome, traders. It's been a while since I've been able to do a week in review video, and because of all the volatility, I am doing a day in review video where I'm going to look at yesterday, which was Tuesday, May 17th, and I'm also going to do it using the new Vix templates which have come out. Now, what is different about the Vix templates is that on the SPY chart, which you see here on the left, I'm using the chart that has the VXX removed because the VXX as of May 18th is still broken, and it's being replaced by the SVXY. And on the ES chart, same thing. I've taken the VXX out of the solution and I've replaced it with the UVXY. Really important, if you are using this as a ZoneTraderPro user, you come to the setup for the Vix template right here and scroll down, and you're going to have to add the two extra symbols, the VXY and the UVXY here, and there are the instructions for doing it. You do not need to add any services with Kinetic. I've confirmed that these two symbols are included in the packages that we pay for right there. Okay, so we're going to start by taking a look at the trades from yesterday morning. We have a short trade with divergences on both the ES and the SPY. We have a second short trade here, a third here. Down here, the VIX flips to green, and we get this buy signal right here. We also had divergences. We also had a divergence on the ES. Very quickly, it spikes up 5 points. We get special divergence and ES divergence on as a sell signal, and price rapidly drops. Right here, we developed a signal. What a blue line means for a divergence signal is that the signal became non-divergent. So at this point, right as we were being given the signal, it becomes non-divergent. But for statistical purposes, I've marked this as a loss to be fair. So even though we never even would have had a chance to get in this trade, because the software told us we had a divergence at this point, we marked that as a loss. We had another short trade, a short trade here also with ES divergence. We had a long trade here, very weird sequence, maybe just due to illiquidity right there, where we did have long signal and divergence, ended up trading higher. Right here, I'm calling this a loss because we would have gotten the signal right here. It would have traded down about another point. And at this point, I'm calling it a loss only because the divergence signal went blue. But as you can see, it did trade 4 points higher after the entry. We next have a series of short trades. I'm marking the short trade from here because this is where we would have initially gotten our signal. Another short trade successful. Another short trade, again, due to that illiquidity that we would have entered here, would have gone against us, and we would have gotten a real-time signal right there about our break even to get out. Another short trade, and again, notice here before this big reversal, the software did indicate accumulation. It traded a tick lower, and that's why we see the signal busting. But as you can see, price traded up rapidly and severely if you had not taken your profit there. We next had a successful long trade and another successful long trade right here. Here we had a green VIX with a divergence signal that would have been a loser. We had a short signal from here, and then price traded about 2 points higher and then traded back down to a little bit better than our break-even point, where we got this buy signal right here. Again, this buy signal is trading against the VIX. The VIX is red, but that is not necessarily a reason to enter, but it could be used as logic to exit a trade. We then had a second buy signal here. Again, the same thing happens, the special divergence, and then we're going to trade down significantly. I've noted in the past that when there are special divergences and they continue to line up as being special divergences, that this is a sign that we are topping, and you see that right here. What special divergence is from the low to the high. There is a divergence in the amount of shares. So here there's about 14,000. There's about 12,000 there, about 2,300 there, and about 41,500 there. So we had a few more short trades. This one also had short distribution on the ES chart. We had another short trade there. The VIX then flips to long. We have a long accumulation trade here. We have a long special divergence trade there, followed by another long accumulation buy signal here. The VIX flips to red about this point right here, so we're going to ignore. We're not going to be taking that as a short, and we're not going to be taking that as a long. Here we have a long accumulation buy signal, and to get back into the theory of ZoneTrader Pro, what happens here is that we have this very strong trend establish. We have a strong trend and a strong trend reversal signal on the ES, and then we trade into an exhaustion pattern. Now, this is the theory that goes all the way back to 2006, and you see it playing out every day. While we would be trading against the VIX here, what would have been, in solely my opinion and not any trading advice, is that the higher risk trade with less reward would have been from here, because price could trade all the way down from 40.60 all the way down to about 40.50 and still be within a trend trade pattern. So in this case, we have this tremendous amount of risk right here. And the problem is, as far as reward goes, the reward here was only 4.5 points, and the exhaustion pattern combined with two divergences, well, that probably would make for a better trade, and that was worth 10 points right here. Now, you would have been trading against the VIX at that point. However, you did have the multiple divergences and the exhaustion pattern going for you. So something to consider in a trading plan. It's not just buy and sell with the VIX and the SPY divergence. You want to consider everything when you make that trading plan. Next, we had a long accumulation. We had a short special divergence signal. The signal occurs right there. Again, because of the illiquidity, it traded about 2 points higher. Then we finally are going to exit that trade somewhere around break even right here. That would have been a good idea. There we have a loss. The VIX was green right here. You basically have about a 1 point loss there. Not bad. We have another successful short. The VIX flips. We have a very successful 9 point long. We have a second successful 7 point long. Here the VIX had flipped to red right there, and you would notice that it flipped on both templates, but on both templates there was accumulation divergence, and then that goes for approximately 10 points higher. Again, what do we have here? We have a broken reversal pattern on the ES that you can see on this chart right here, and we had special divergence and a VIX sell signal. So again, the software, when you're looking at more than just a VIX, when you're putting everything together, we want to take into account that we had a pattern that I call broken reversal, basically to the tick, and that trade ended up going for approximately 12 3/4 points. So very powerful when all of these things are working in our favor. We go forward a little. Right in here, we had a special divergence signal, and the signal actually was during this entire time, but we didn't get a red VIX until right here. So this is why the trade is marked as a loss right here. If you would have entered it somewhere in here, the VIX goes green about 2 points later. So somewhere in here, we would have had a losing trade if we just took that and then got out of it when the VIX switched back to green. Here we have a losing trade. Again, we had green VIX. Price trades a little bit lower. We have to call it a loss because the accumulation divergence had been busted. We are going to follow that up with a long accumulation followed by a short special divergence. Here we had a short special divergence here, a losing trade here where we originally got the signal because the illiquidity took it about 5 points higher before it comes back down. We get a long signal, take that long signal. Good for something like 15 points right there. Pretty nice trade. Again, a long signal, and we are trading into a exhaustion pattern. Again, exactly the same pattern as before. The exhaustion pattern is right here, and that ends up going for about 11 points short. The exhaustion pattern does end up calling a top, and we're going to trade off significantly from there. We have our first short trade there, our second short trade there, third, fourth, fifth, sixth, seventh, eighth, ninth, 10th, 11th, 12th, 12 trades in a row that were successful. The VIX then flips. We've got a long accumulation, and we also have accumulation divergence on the ES. Again, a second accumulation. And again, very important to note that in real time, we're being given these special divergence signals telling us to get out of the trade. This trade was good for 6.5 points. This trade was good for 6.25. So if we weren't out just based on a point target, you were being given real-time signals to get out. We then had an accumulation long right here where we basically lost about a point. Same thing right here. We had an accumulation long. We basically lost about a point. This is going to take us into a series of long trades, all of which were extremely profitable. This one went for approximately 17 points. This one for 10. This one for 4. This one for 15. And then again, we trade into an exhaustion pattern right there. And on the ES chart, you notice that we did have distribution divergence on the ES chart telling us to get out of that trade. After making the video and doing the editing, I noticed something on the ES chart that I wanted to highlight. This, again, the ZoneTraderPro system is not just about the VIX and divergences. It's about probably what I consider the most important indicator, and that is showing the ratio of the KP2, which is right here. Now, what's important to understand about this is that what I saw is how the ratio goes from this high right here and is going in the opposite direction of price. Now, I've done several videos on this, but here is kind of an extreme example in both of these examples right here. This is somewhat of an extreme example of how price, when it's divergent from what the ratio is doing, that is basically showing you that here, that this is buying support in each of these. So if there was actual resistance to be had, the ratio would be going higher as price went higher. In this case, and in the second example, the ratio is going lower. And so basically what we can see is that from this point to this point, there actually was some resistance put up in the form of limit orders. However, once that resistance got busted through, then the limit orders dried up and the market continued higher. So this is basically why we get a market that trades 40 points higher from the lows that are being made back here to up to this high up here. So I wanted to highlight that because these two ratios in a row, very significant, and basically when you combine that and put that in your toolbox, that was some of the reasons why you would have been looking to go long in through here. The VIX, however, was still green. We were given another accumulation signal, and that took us a little bit higher, about 6 points higher. Again, another real-time signal to get out. We had green VIX here, would have taken that for a loss. We had a successful special divergence trade. Again, accumulation on both the ES and the SPY, telling us that we should get out. And I want to take just a second to talk about some of these numbers. And these numbers that you see right here for what I call the KP2 ratio are very important. And basically, a number that is approaching 2,000 shares per tick is something that I consider to be a decent value for accumulation. And you see back here at the low, they were accumulating them at a rate of 1,500 shares per tick. Here it was 2,058. Here it was 2,800. And you can see why the values make a difference. And again, this isn't just about selling a divergence signal with a red VIX. We need to be making intelligent decisions that we are seeing in real time from the data that the software gives us. So we had this accumulation long here. I didn't mark this as a trade because the VIX, in my opinion, is showing red from this point right here. So it wasn't marked as a trade. Again, another accumulation long, good for a little over 6 points. Here's one of these losers that takes us a point below where the software went non-divergent at. We had a short divergence. Here we would have entered here. We didn't have a signal back here because we actually had green VIX when we had a signal. And we got our signal in here. So that is why this is where I placed the green circle at, because this represents where we likely would have been entering the trade at, when about 2 points against us and then 6.5 for us from the apex. Again, real time, you're being shown accumulation divergence. Again, a fairly decent number at 1,500 down here. Again, we had special divergence here, trades a few ticks higher, but this is why the circle is there, because that's where we would have entered. We had, again, an accumulation divergence right here. Again, notice the ratio number is even higher at 3,500 right here. Good reason to get out of that trade. Goes for about 5.5 points. We have another accumulation long, and again, a real-time signal. Here we have a special divergence followed by some illiquidity, and I'm not really sure if in real time what we would have seen here. It is showing a special divergence trade. It may have just been because of the illiquidity, not really sure. Again, another special divergence trade. Here's a trade where we would have entered here and it traded down, but not to our target, and traded up. And then we eventually got our 35-cent pullback. In this case, it was 40 cents. So here would have been our entry. It traded down, traded up, and then traded back down. And this is the problem with the illiquidity that we're seeing in the current market. This is going to happen, so you need to be aware of that. and you need to have your stops. You have to know where your stops are going to be at. We then had a losing trade here where we would have gone short. We had red VIX, trades up almost about 4 or 5 points. So that is clearly a loss right there. And that basically does it for the day. So when we come and look at the entire day, if my math is right, there was 82 total trading opportunities, 70 of which were wins and 12 of which were losses. And that's going to come out to be about an 87% win rate in some pretty extreme volatility. And the really important thing to remember is that the past performance is not necessarily indicative of future results, but the point is that even with the VXX no longer being in the picture, the alternatives are accurate in telling us the state of the VIX, because remember, there's a combination of 6 different symbols going into this. It's not just one symbol, the VXX. We have found probably 2 appropriate replacements for the VXX until the VXX can get repaired or replaced. So that'll pretty much wrap that up. Wanted to do a quick video. If anybody should have any questions, please feel free to contact me either on Skype or just give me a call or shoot me an email from the contact page of the website. Thanks for watching. Stay safe and stay safe trading.